Now let's just talk about flows, right? And there's one report which is doing the rounds, I think, which perhaps signals a large amount of inflow which could come our way. What am I talking about? A U.S. federal government retirement fund. It's called the Federal Retirement Thrift Investment Board. It's one of the largest U.S. government retirement funds. It's got assets of about $600 billion. Is looking to change its benchmark. I mean, funds benchmark themselves to indices like the MSCI, Emerging Market Index, the World Index, etc. And this one is changing its benchmark. And what this means is that markets which so far were not part of the allocation for this particular fund sort of come into the fold. India is one such market, and India is expected to be a large beneficiary once this change takes place. We have Sriram Velayudhan, Vice President, Alternate Research at IIFL Securities, joining in. Sriram, good morning. Good to have you with us here. Thank you very much. I trust you would have seen sort of the announcement from the fund itself. What do you make of it? And if you've been able to kind of put some of these in terms of the new benchmark, what this would mean in terms of reallocation and money our way, India's way.
Good morning, Prashant. Yes. So in one of their board meetings, the Federal Retirement Thrift Investment Board, as you rightly pointed out, it is one of the largest retirement pension funds investing globally. So the fund has decided to change the benchmark index from MSCI EAFE, so basically tracking Europe, which used to track Europe, Asia, Australia and all, to MSCI All World Investable Market Index, ex of USA, China and Hong Kong. So the objective of the fund in changing the benchmark was so the rationale that they have given on changing their investment benchmark is they wanted to expand their investment opportunities and also improve the risk return profile of the fund. So they had done some internal analysis. This is what the release from the fund suggests. Basis their internal analysis, the MSCI All World IMI ex-USA, China, Hong Kong has outperformed MSCI EAFE over the last 20 years on a risk-adjusted basis. Also, the very fact that it also gives an exposure to broad basket of stocks across the emerging markets, which have given superior returns to the existing benchmark. So all this is behind, all these are the reasons behind the fund changing its benchmark to the All World IMI, ex-US, China and Hong Kong.
What does this mean? I mean, at the end of the day, for our viewer watching right now, he would only want to know what this means in terms of money coming into the Indian markets, right? And the reports indicate that it could be in excess of around $3.5, $3.6 billion. Is that a reasonable estimate, you think?
Yeah. So, good morning, Sonia. So in terms of flow impact, the specific category of fund which has an AUM of roughly $68 billion, so basis our estimation, we expect inflows of roughly $3.4 to $3.5 billion in 2024, spread over 4 reviews, because largely the document is silent on how it will work out. It will be implemented in 2024. This is what the official release suggests. Now the MSCI indices undergo review each quarter starting Feb, May, August and November. We expect same to be implemented. So 3.4 billion is our expectation for India basis the inflows. This is significant. This is significant because what we have seen over a period of time is India, on the basis of superior performance, has ended up adding more names. Even weightage of India in the MSCI Emerging Market Index is close to 16.2%, if I am not wrong. So let's say if the momentum continues in the Indian markets over and above the usual net inflow that we see in each review, this should add on to that inflow.
But this will be
positive.
Okay, $3.5 billion spread over 12 months, right? That's what Sriram is saying.
No, $3.5 billion spread over 4 reviews.
4 reviews, but these. Okay, but all 4 tranches will happen into 24.
Yes, correct. Right. Yes.
Yeah, that's what I meant. Yeah, through the course of the 12 months, 2024. Sriram, this would, if you were to divide this equally into 4 tranches, I mean, for context, what does this mean compared to average what we've seen in terms of what FIs have done recently? I mean, how significant could this be? Kind of filling the gap in that sense, some of this passive money.
Okay. So, Prashant, if one assesses in the last couple of weeks, I think the flows have started reversing, but overall FPIs have been sellers in the Indian markets. Largely in the last few months, this has changed. So, as I said, India has been adding more names in the emerging market basket. To the best of my knowledge, the last 4 reviews, on an average, India has seen inflows to the tune of $500 million to roughly $1.5 billion. We have our November quarterly review this Thursday. That is day after tomorrow. That again is a net inflow event for India to the tune of $1.2 billion. So in the overall context, as I said, let's say if India continues to outperform the other emerging market peers, this will add on to the inflows in the overall scheme of things.
Okay, all right. Well, always a good thing for our markets, right, Sriram? So thanks a lot for joining in. Inflows of $3.4 billion could come over the span of 4 reviews. Well, that's an important piece of information. Let's